Rance, what exactly is preferred equity when it comes to real estate?
Well, it's similar to preferred stock in its function, meaning that it's senior to the equity, to the common equity, but it's junior to a mortgage, and it fills the gap between mortgage proceeds and a borrower's equity.
And core real estate equity is what investors usually know and love. So what are the differences between preferred and core, especially when it comes to returns?
Yeah, that's a great question. So the preferred equity, it kind of is the best of both worlds. It lives in a middle ground where you have subordination of the common and you have that seniority of the mortgage. And so what happens is you get a priority return of principal, priority return of payment, but through call protection features on the preferred equity or even participation structures and equity kickers, you can get an equity-like return without taking full equity risk. And in today's environment, that's appealing to a lot of advisors.
And what are the pros and cons of investing in preferred equity in the real estate space? Let's talk about the commercial space first.
So in preferred equity, the con would be you limit the upside to some extent, right? But the pro is clearly having a senior position in the capital structure. So by definition, you're investing at a discount to today's market value. When we look at a risk-return spectrum, think about lowest risk and return in mortgages all the way up to highest risk and return in equity. Preferred equity occupies what I would argue is the most efficient spot on that risk-return spectrum in terms of its return potential relative to its risk.
So you're sitting down with someone over at Northmarq, you're trying to interest them in a preferred real estate equity investment. How would you take them through it?
Yeah, so Northmarq, first of all, is a capital markets firm. So we're advising people in obtaining mortgages, preferred equity, mezzanine loans, or equity. I run the investment management division, so we can provide that preferred equity. And the way we would take them through it is if you have a $100 million asset, and in today's market of a little bit higher rates than they used to be, you're only going to qualify for a $65 million mortgage. You only have $20 million of equity. You have a $15 million shortfall. Your choices are to borrow that in expensive form or bring in an equity partner who might take half the upside. So preferred equity kind of balances the capital structure in the most efficient way.
So when a lot of people look at commercial real estate, they look at vintages. Mm-hmm. So for example, maybe 2001 wasn't a great year because of COVID, and things kind of improved since then. So where are we in terms of commercial equity right now? And how does preferred real estate equity play a role maybe in helping investors, whether they be institutional investors or retail or individual investors?
Yeah. So I think today's market, since COVID, the fundamentals have been able to heal a little bit, but the capital markets have been stressed by the interest rate increases from 2022 and 23. So as all these mortgages mature, it's going to create a gap in that capital structure. And that's both a borrower need to fill that gap and an investor opportunity to fill it in terms of something that's priced between mortgage debt and equity.
And then finally, so how is Northmarq filling that gap? Who are some of your clients and how are you helping them out with the best possible product for these particular times?
We represent a range of individual and institutional investors, and everyone uses our strategies a little bit differently. So we can cover mortgages, mezzanine loans, preferred equity, and equity. I think within preferred equity, it appeals to people who want to get above standard current income. So a little bit of a high yield alternative, which acts as a deflation mitigant if rates fall. And at the same time, it's backed by a hard asset. And that hard asset in inflationary times, the land, the bricks, the sticks will be more costly. So you're able to kind of play that middle ground again between inflation, deflation, current income, and upside potential.
All right, well, thanks for coming on and talking about it.
Thank you. Thanks for the time. Nice to meet you.